Continuing the lessons learned by Naren and paraphrased by, he sent a video, and then that video went viral, I think. Then Larissa of Morningstar has also made a summary of it. So one of the things that this is part 2 of the video, you should see the part 1 also, but there's no great connection. So yeah, so Naren says use extremes to your benefit. So when the market is extremely polarized, and you know when it is extremely polarized is when the, let's say, the market cap of Sun Pharma is greater than the market cap of, say, the Birla Group or the Tata Group or something like this. You know that pharma is overpriced, and other relative to pharma the others are underpriced. So this is a good time to at least remove money from your pharma and healthcare funds, or even from of the pharma shares that you hold. But I have always looked at it this way, that my core pharma portfolio will never go to zero, right? I'll never go to zero in, say, Lupin, in Dr. Reddy, I don't have Dr. Reddy, in Lupin, in Cipla, in Sun Pharma. I'll never go to zero. I will have at least 500 shares left always, and during a bad time I will build more position. For example, I remember I bought Sun Pharma at 300 rupees also in 2020. It was an opportunity, so I didn't sell, so it's still there in my portfolio, reducing my average cost. Most of the shares which I bought in 2020 at 200, 300, I've sold it at 400 or 600 on doubling, or some things have gone up. I think Intellectual Design Arena went up 7x of what I bought. So some of the shares you hold, some of the shares you sell. So to say use the extreme to your benefit means you should have some other asset from which you can switch. For a fund manager, life is easier because every month he gets an SIP amount with which he knows what he can do. And all these fund managers have a 500 crore or a 1000 crore or a 2000 crore SIP book which can be used to invest. So during extremes also they have money to invest. For you to have money to invest during those times is extremely difficult. So let us say that you were sitting on huge infrastructure company profits, like for example BHEL was 305 or 317 or something in 2007. So if you sold BHEL, Tata Power, Kotak Bank, Cholamandalam, HDFC, these were all at very Infosys, all these were, sorry, Infosys was not doing so well in 2008, yes, it was doing well in 2000 perhaps, or 2001. During that period, when you say, oh, the market cap is too high, I should sell, the question also to answer is, looking at the future prospects, is the market price really high? Let us take the example of, say, Microsoft today. Microsoft is definitely at a high, but the kind of AI that it can implement, I think none of that is all factored into the price. So should you be selling Microsoft today? I don't know, because I don't have Microsoft directly. So to me it doesn't matter. It is for my fund manager to decide whether to buy Microsoft or not to buy Microsoft. But the chances are, when you are a direct investor, you're saying, I know Microsoft is high, but will it go higher? It's not easy to answer those questions, and it's far more difficult to be ready with cash during such times, because when you're sitting on cash, you realize that cash is not giving you any great return. But when you get an opportunity like this, the cash, the money that you did not earn on the cash for last, say, 3-4 years is wiped out in one single transaction. You have to handle everything, because somebody will tell you, oh, you must do asset allocation. Based on asset allocation, you need to have only so much in cash. So why were you sitting in cash? I don't know, but did it help you in March 2020? Answer is yes, right? So why was I sitting in cash in March 2020, April 2020? I have no clue, but I remember I sold in January, February, again not because some virus was there or anything like that. It's just matter of chance that I had cash in my March 2020 or April 2020, which I could buy because I thought market was beaten down too much. Naren says money can be made in structural investing. More than agree, but I have no clue to talk about it. Part-time investors have a lot going for them. This is another important thing, that when you are investing, you should have some other hobbies or some other activity to do. You cannot be just an investor. If you are just an investor, then 9 a.m. you log in and till 3:30 you are watching the day-to-day events in the market, and you will be tempted to do something. Let's buy Tata Motor DVR, let us sell Maruti, it's gone beyond past 10,000. Some of these temptations will always be there. So if you don't look at the market on a day-to-day basis, you can be much better off. In fact, I have one particular number of 2-3 net worths of mine, my wife, my daughter, my mother, right? So all I do is look at that number. I do not know on the breakup what went up and what went down, which mutual fund went up or which share went up or which share went down. I have no clue. I just keep looking at the overall number, and because once you start looking into the detail, you will feel that you need to do some action. So do I look at it? Yes, I look at it. But do I look at it on a daily basis? No. Maybe on a 20-day basis or 1 month basis, I will look at it and take some corrective action if need be, right? So part-time investors have an advantage that they are not watching the market on a continuous basis. It's like watching the cricket scoreboard. If you don't understand what is happening, how will you get excited by when there's a 4 or a 6, right? So if you're watching the match, watch the match. Scoreboard will take care of itself. If you have nothing else to do and you're watching the scoreboard on a regular basis, on a full-time basis, that's bad luck, right? Naren then says value investing is at its core is the marriage of contrarian streak and a calculator. This is true. After you have identified a company, you have to sit with the calculator and see whether it is really justified. You have to do some research into saying whether the balance sheet quality is good, right? From there it has to start. So that is the use of a calculator. Now for me, when I decide to buy a share, I go and check out whether it got institutional holdings, etc. If it does not have adequate institutional holdings, I am very worried about the liquidity of the stock. So I may not even touch it. But the question is, if you are a value investor, how much of research can you do before you buy a company? It's a very difficult thing, but yes, you need to, apart from after identifying the company, you have to look at the balance sheet and very carefully and then buy. It says there is a time to measure your performance. I don't fully agree with him, because you do not know when is a good time to be doing your performance. I think every time you're paying your advance tax, you better check how your portfolio is doing, see how much of the dividends you have got, how much is a long-term capital gain, how much is a short-term capital gain. Today all software tell you, okay, this is 20 days to go for short-term, for long-term, so wait, right? All that indicators are available. So keep looking at your portfolio on a regular basis. You don't judge yourself. Don't say, oh, I've got only 16%, somebody else has got 22%. If your goals can be met with 1%, even 16% is in excess. So there is no reason to think that I should not be measuring my performance. Measure your performance, but don't judge yourself, right? So another lesson, he says, the rewards of investing goes to patiently stay rational in an irrational market. So I have friends, I have cousins, I have clients, I have my own portfolio, which has seen tremendously long periods of inactivity, and that's what actually makes money. So if you have invested in 2008 until 2023, you have not withdrawn one single rupee from whichever asset class, you will definitely have made money, right? So if you have stayed patiently for long periods of time, so some of us have lived it, so it does not come as a big lesson. But yes, for those who believe that they will trade their way to becoming a millionaire, I'm not sure that's the best road to take. Thank you.